Most European and Asian trading floors close early on the occasion of Christmas Eve. Besides, the thin market comes as no surprise. The US dollar is trading quietly and slightly high against its rival currencies. The Canadian dollar is trying to recover from yesterday's blow as Canada released dismal GDP for October. Financial markets are closing the year on the optimistic note. There is a growing likelihood that the global economy has avoided a slowdown amid waning risks of recession in the US and the Eurozone. Nevertheless, traders are discouraged by the US economic data released at the year-end. An unexpected decline in durable goods orders signals weakness in other industrial metrics, so worsening fundamentals could indicate negative economic trends in the coming year. In this context, the Federal Reserve could again think over the idea of deeper rate cuts. Today, the economic calendar is almost empty. The only report to pay attention to is a consumer confidence survey from the Conference Board. The US dollar index opened the New York trade with a marginal gain to 97.73. The thin market means a lower liquidity. As a rule, trading ranges gets narrower in this context. Besides, the thin market creates the conditions for breaking support or resistance levels. The same situation occurred in the early 2019 when the dollar-yen pair slumped 4% in a couple of minutes. At present, there are a lot of triggers. The US and China could give up the idea of a truce. The risk of Donald Trump's impeachment could resurface and even escalate. Last but not least, investors stroke fears about a hard Brexit as Boris Johnson's stance lifts odds of a no-deal exit. In recent weeks, the Canadian dollar manifested strength despite soft data on retail sales and employment, so the loonie was gaining ground for the whole last week. However, its slump on Friday overshadowed the earlier gains. On Monday, the Canadian dollar also had a run of bad luck. Canada reported on its gross domestic product, which unexpectedly contracted in October. Meanwhile, the Bank of Canada finds the ongoing monetary policy appropriate to the situation. If the US economy reveals signs of recession next year and Canada's fundamentals get worse, the central bank could venture into monetary easing. Today, the US dollar versus the Canadian dollar pair has got stuck in the middle of a trading range. There are equal chances that the price could move both to the upper border at 1.3172 or the lower border at 1.3141. That's all for today. Thank you for watching and subscribe to our YouTube channel in order to keep track of all the events on financial markets with us on Insta TV. Bye.